It's so interesting as you look at overall market cycles for crypto, right? Like when we go through bull markets, it's when a whole new segment of users decide to come into the market, right? And like to your point about like why the spot ETF for Bitcoin didn't really rally markets, it's thin liquidity. That's because everyone that's already trading in the markets is an existing participant in the market, right? And so people are kind of already. So you're not
Yeah.
really going to see. You need an inflow. You need people to go onto the on ramp into the space, and yeah, it's a harbinger. Like the approvals are a harbinger for that bull market. So you have like, and you can even split it out even more, right? So you can look at it from a like that's more of like a speculative aspect of it, right? People investing it because they think it's sound money, they think it's a store of value, they think that there's a use case for it. But then you have all the different scaling solutions that are happening on the Ethereum blockchain. It's getting cheaper to perform transactions on there. So the use cases are growing too. And those are much more deeper
Yeah.
fundamentals. So
Mhm.
I see like the Bitcoin ETFs as much more of like a technical flow bull case versus not necessarily
Yeah.
fundamental.
So I
But you're also
actually have a
seeing
question
growth
for
in
you,
both
Rob.
sides. Yeah.
I have a question for you because one of the things that I've been seeing a lot on Twitter is this take that like institutions, and I'm going to classify institutions as not hedge funds, not family offices, because those are
Hmm.
not really institutions. I'm really thinking more along the lines of like endowments, pension funds, real money asset managers types of situations. And you have professional experience dealing with them.
Hmm.
Um, I have heard the take on Twitter, which I, for the record, vehemently disagree with. That if an institution wanted to invest in Bitcoin, they would have already done it, and they don't need an ETF. So, from your take, what advantages does an ETF have for like a proper institution versus them just going to Coinbase and buying Bitcoin spot?
There are being able to access digital assets through traditional, well-known channels is massive, massive. Because if I'm an institution, my primary job is being a fiduciary for the underlying participants in a pension plan, the university that's going to receive payments for a new building. I am a fiduciary for the end users of
Can
that
you
capital.
define fiduciary just so people understand like the
Sure,
magnitude of what that actually means?
sure. So I am an employee and I am acting as an agent for the benefit of others, not for the benefit of myself. I get paid a salary and perhaps a performance based bonus depending on how well I perform in my job. But I am not the primary recipient of the benefits of my actions. I am acting as an agent for others. So if I'm working at a pension plan, my job is to be a good steward of all the New York City nurses that they have a pension plan. I'm making sure that the investments that are made are sound investments that will provide capital for the nurses in retirement to help pay their bills as they age.
Yeah. To
That
be clear, we're not talking about high net worth people that have the
correct.
ability to punt on. We're talking about nurses,
Exactly.
teachers, retirees for postal systems, state employees, all that sort of stuff. Like the
Exactly.
level of conservacy here that they have in these types of arrangements as a fiduciary with a financial responsibility to do the best thing for the recipients of that plan is actually significantly high.
Huge. And because the amount of assets that you are controlling or managing are enormous, there are a tremendous number of checks and balances to make sure that an employee can't go in and do anything wild with that capital, like punt it, as you mentioned, like within the family office space. There's no punting that happens in this space. You have an investment committee. If I'm working at a large pension plan as a fiduciary, again, making investments, I will put together a plan, a memo that will get presented to an investment committee, and that investment committee will drill me on why we should be making this investment and is this a sound choice. So there are a lot of checks and balances that come into that. If and so also you have to think, so if I am in that position, I have a job, I have a bonus. I also have a lot of downside risk. If I invest in something that is a phenomenal opportunity that will 100x, I don't my bonus won't necessarily change that dramatically with that payment, right? There's a lot, but if that thing goes to zero, not only will I get fired, but probably the investment committee that approved it will get reviewed. There could be like state legislation could come in. There's a lot of downside risk for that. So to your point, like you have to be very, very careful. And if I think about like a spot Bitcoin ETF, they're known custodians. ETFs are very well understood. It's been tried and true over decades. It's understood. So the real risk that I'm taking in that is just purely about Bitcoin and its abilities. When I have to invest in it directly, I have to understand how sound is Coinbase, how sound is Coinbase's ability to custody assets. There's a lot of regulatory uncertainty around that. But with a Bitcoin ETF, the institutional side of things is already well known. I can just look at Bitcoin specifically. So it reduces the risks dramatically for institutions when these ETFs come on market.
Yeah, no, I agree with you, and thank you for that, because like I think people need to hear from someone who has actually sold and dealt with institutions before, because they're not the same as like a hedge fund, right? They're not the same as a family office that has the latitude to do all sorts of stuff, and they can't get away with, oh, like where do you custody? I don't know, we just pop it in Coinbase, or like we have it in cold storage, or whatever, right? Like
Yeah.
the burden of like every decision you make is so high, and being able to justify like, oh, like we have it sitting on Coinbase, or we have it sitting in cold storage, or we have it sitting on some PM's like wallet or in a MetaMask account is fundamentally different, right? Than oh yeah, like it's at BlackRock. BlackRock has it. We're good, right?
Yeah.
No one loses their job over getting a BlackRock like ProShares ETF where they've gone through a full regulatory oversight process and everything is custodied and taken care of properly. So it's like I think people underestimate sort of like the degree to which these super conservative real money institutions have the ability to allocate capital. And even when they do allocate capital, like what percentage of a portfolio would you suspect that they're going to allocate to something like Bitcoin?
1 to 3%. I think 1% tops. Like if you look at even things that are a little bit more like if you look at emerging asset classes, for example, private credit. So after the great financial crisis, Dodd-Frank regulation came in and barred banks from doing a lot of the investment activities that they did in the past. A lot of what they would do is provide lending to mid-sized companies that needed a $20 million loan. All of that now has been moved to the buy side, to asset managers that are providing that. All of this has happened within the past 12 years. It's an emerging asset class that's pretty well known in the markets, and that currently is about 5% of investor portfolios and growing. I think if you see something emerging asset class like cryptocurrencies, Bitcoin, that could be seen as more of like an inflation hedge or an opportunistic allocation, something like 1%. But this is trillions of dollars in assets that these institutions manage. So 1% can be extremely sizable, especially in a low volume market.
Yeah, and I have one more question for you. I feel like I'm like asking all these leading questions, but you're hands down the most qualified to answer them. And I yak about all this sort of shit, but like it feels nice to actually have someone who knows what they're talking about say it. But like, what role, for example, then does like the marketing and research department at a place like BlackRock or Fidelity or Invesco have in terms of like allowing institutions to feel more comfortable allocating assets to something like Bitcoin or Ethereum or so on?
What kind of tools does a marketer have to showcase that it is a safer or
Yeah, I mean, just I mean, does it give any influence? Like, for example, like if we were to say, I don't know, BlackRock now all of a sudden has like a research team giving you, portfolio analysis on what this sort of looks like, and they've allocated huge marketing budgets, and they've got portfolio strategists and white papers and webinars and all sorts of stuff that like they can walk in now to a state pension fund and say, hey, listen, we've actually done some analysis on this, here's the way it works, This
Yeah,
is how it might
I
look
see
in your
what you're saying.
portfolio. This is how you could size this, so on and so forth, right? Like,
Yeah,
does that have any impact in the market, or is that just sort of
yeah.
like extra stuff, and people kind of discount that and throw it out the window?
Mhm.
What are your thoughts on that?
I think there's a lot of education that still has to happen. It's still incredible how little people really understand this space. So there's still a ton of education that's going to happen. Institutions are notoriously slow to make investments. I mean, these are like massive oil tankers, weighing like hundreds of thousands of tons going through the ocean. They don't stop and shift on a dime. So these are very slow moving institutions. So there's going to be a lot of education that's going to need to take place. And when you think about incentive structures, which, being a UFC grad, that's like what we care about a lot, is just like understanding basic incentive structures. Look, Bitcoin and BlackRock are aligned, right? BlackRock wants to see asset flows into that ETF so that they can earn income. And so they're going to do everything that they can to show how that can be used appropriately in a portfolio. So there's going to be, the number of BlackRock employees is something like 25,000. There's probably over 3,000 salespeople globally that are going to be plugged into this going forward. So it's a huge distribution sales force that's going to be working on this.
Yeah. So I think, like I said, I appreciate your perspective, because I've dealt with institutions before, but you've like really dealt with institutions before. Not to like tell tales out of school or anything like that. But that being said, like I think there's like a certain level of understanding versus just someone who's on Twitter being like, oh yeah, I mean, if an institution wants to buy Bitcoin, they probably already bought Bitcoin, versus like actually having understood what it takes to move something across the line. We're not dealing with people that can like arbitrarily decide to do something and then allocate capital the next day. Like this is a grind, it's a process, but
Yeah.
the total capital allocation that's out there can actually be reasonably large. In fact, probably orders of magnitude more than we've currently seen in the space.
And trust is extremely important. We talk about a lot about in crypto. We'd like a trustless network, which is wonderful. And I'm looking forward to the day where we get to that point at an enormous scale. But people are used to, they need something that they trust, something they can look at, and they know that they're going to be treated well, that this is a relatively safe thing. And BlackRock provides that. If you're an institution making an investment, you care about your downside risk. Like I told you before, and we actually used to have this phrase. I used to work at BlackRock. The phrase, no one gets fired by hiring BlackRock. It's a very safe way to make investments. And that's why BlackRock is able to accumulate trillions of dollars in assets, because it's seen as that safe resource. So yeah, it's very, very interesting. Super.
Cheers. But